QYLD has a massive dividend yield of around 12%, and it's one of the most talked about investments among dividend investors. There are many people who believe that QYLD is one of the absolute best investments that dividend investors can make. This ETF has such a dedicated following that it even has its very own Reddit community. But then on the other side, we also have people who are skeptical of this investment and have fears that it will underperform the market in the long term. So in this video, I've created an entire financial model in order to perform a backtest on QYLD. And what this is going to allow us to do is we're going to be able to see exactly if and when we should be investing into QYLD, what reinvesting dividends into QYLD looks like, and we're also going to be able to see if it makes more sense to invest into dividend growth stocks or QYLD. If you'd like to be able to download any of the spreadsheets used in this video, then you can head over to my Patreon page at the link in the description. So with that being said, let's go ahead and jump into the analysis. Okay, so we are currently looking at my QYLD backtesting model, and I know it looks like there is a lot going on here, but I'm going to explain everything as clearly as I can. So in order to perform a backtesting model, the very first thing we need to do is we need to look at the historical data for this fund. So what I've done is I've imported every single day that this fund has traded. I've looked at the price of that day and the amount paid out in dividends on that day. So if we scroll all the way down, you can see there's a lot of data here tracing all the way back to December 12th, 2013. And at the time, the fund was trading at a price of $25.05. So if we scroll up here, we can see some price metrics that I'm looking at to build this model. The very first thing we're looking at is a yearly growth rate of negative 1.83%. Like I said, the original price at the beginning of this fund was $25.05, and the most recent price is $20.66. So we're going to use this yearly growth rate to put into our QYLD backtest. Now, obviously, the main focus of QYLD is the dividend, so we need to look at some dividend metrics as well. So the average dividend yield of this fund since its inception is 10.17%. Now the current yield is closer to 12%, but the dividend growth of this fund over time is negative 2.11%. Now they have had months where their dividend is as high as 26.85%, and since the inception of this fund, they have had 3 months where they have paid out no dividends. Now one of those months was the very first month that it was created, so technically it's 2, so we'll switch that to 2. And we can see that the percent of months with no dividend is just 2%. So that's actually pretty low amount of months where you don't get paid a dividend, because you have to keep in mind this is a monthly dividend paying stock. So with the data that we have here, we can jump back over to our QYLD backtest and we can list in some variables here. So currently we are looking at a price growth rate. Now, like I said earlier, the historical data for yearly growth with the price is negative 1.83%. Currently in this model, I have it listed as negative 1.3%. I think that's going to be closer to the long-term price growth rate for this fund after digging into it a little bit more. Now, the starting share price we're looking at is going to be about $21 per share for this model. And what we're going to do over here is we need to indicate if we're going to have a lump sum contribution or a monthly. So for this example, we are going to look at a monthly contribution of $1,000, which I've inserted right here. Now over here, these two variables have to do with our dividend. So the first thing we need to know is our dividend growth rate. And so the dividend growth rate, if we jump back over to our historical data, was negative 2.11%, which we can see right here. If we jump back over to our back test, you can see I'm projecting a dividend growth rate of about negative 1.8%. I think it's going to be pretty close to that number. And now I'm applying a starting dividend payout per share of 20 cents. Now, the reason I applied a 20 cents payout per share is if we come over here, we can see that gives it a starting dividend yield of about 11.43%, which is what the fund is yielding at this time. So using all these different variables, it allows us to build out this entire QYLD backtesting model where we can see how many shares we acquire over time without reinvesting our dividends, and also when we are reinvesting our dividends. And what this is going to allow us to do is we're going to be able to see a monthly dividend payout, how much we'll be getting paid out each month in dividends. We're going to see our total dividend income over time, and we're going to be able to see our total value over time, and we can compare the two between without reinvesting our dividends and with reinvesting our dividends. Now, in just a moment, we are going to jump over and look at some charts to better understand this, but before we do that, let's just go ahead and scroll to the very bottom of our model and look at what our results are after 30 years. So right here, currently we're looking at our monthly dividend payout comparison. Without reinvesting dividends at the end of our 30-year period, we can see we would be receiving $2,400 in dividends each month. If we do reinvest our dividends over this period, we would be receiving over $15,000 in dividends every single month, which is pretty incredible. Now, if we look at our total dividend income over time, we can see without reinvesting dividends, it's sitting at about $494,000, but when we do reinvest our dividends, it's sitting at $1.7 million. Now, our total value comparison is pretty crazy as well. Without reinvesting dividends, we can see our total value is sitting at $298,000. But if we do reinvest our dividends, it's sitting at $1.9 million. So you can just see the crazy difference that reinvesting your dividends is going to make with a fund that yields this high. So while this model has provided us some really great information, it still does not answer a few key questions. So what we need is we really need a comparison. So what I've done is I've come over here and I've created another backtesting model, comparing it to a dividend growth stock. So all we really had to do was change a few of the variables, as you can see right here. So what I've done is I've applied a price growth rate for a dividend growth stock of about 7%. If we come over here, you can see the same contribution. It's still a monthly contribution, but we can also see we have a dividend growth rate of 8.5%. So what we're gonna do is we're gonna jump over to our charts and we're gonna be able to see these funds side by side and how they perform over time. So the very first chart we're going to look at is our monthly dividend payout comparison. We have two charts. We have a no reinvesting dividends chart and a chart where we do reinvest dividends. So the red is going to be our dividend growth stock and the blue is going to be QYLD. So what we can see here is QYLD for quite some time does outperform our dividend growth stock, but then you can see once the compounding effect really starts to take place, our dividend growth stock outpaces QYLD at a pretty large rate. So you can see at the end of our 30-year period without reinvesting dividends, our monthly payouts with dividend growth would be about $6,500 compared to QYLD, which would be about $2,441. Now, if we come over here, we can see, say we want to look at about 2030, so this is about 7 years after making our investment. We can see our dividend payout would be about $810 with QYLD, and with dividend growth stock, it'd be about $451. So it's really important to take note of exactly where this switch happens. So it looks like in this scenario, it'd be about 2039, and so our model starts in the year of 2023, so it looks like it'd be about a 16-year period. But we'll come back to more analysis on this in just a little bit. Let's look at our monthly dividend payout comparison when we do reinvest dividends, and we can see that the dividend growth stock once again does overtake QYLD, but it happens much later in this time period. So we can see it's not until about 2048 in this scenario where the dividend growth stock passes QYLD, but when it does so, you can see it happens at a pretty rapid rate once again. Now let's jump over and look at our total dividends received over time comparison. Again, we have two charts, our no reinvesting dividends and our reinvesting dividends. Now our total dividends received, when we look at QYLD, we can see it's in the lead for quite some time once again, but once again it is passed by our dividend growth stock in the year, let's see, the year 2046 once again. At the end of our 30-year period, you would have received over $700,000 from our dividend growth stock, and from QYLD, you would have received $494,000. Now when we do reinvest dividends over here, we can see over our 30-year period, our dividend growth stock does not actually surpass QYLD. The total dividend payouts you would receive from QYLD at the end of our 30-year period would be $1.7 million, and from our dividend growth stock, it would sit at about $1.58 million. Now, if we projected this forward another 10 years, you can see that our dividend growth stock would pass it as it's getting much closer in this scenario here. Now, the final comparison we're going to look at is our total value over time comparison. And this is where we're going to see an extremely large difference. Now, obviously, we have our no reinvesting dividends example and we have our reinvesting dividends example. And right from the get-go, you can see we have a major difference in the total value between these two funds. Now, that's because the way QYLD is designed is it's going to actually depreciate in value slightly over time. You can remember in our model, we applied a growth rate of about -1%, maybe just a little bit more. But at the end of our 30-year period without reinvesting dividends, we can see our dividend growth stock total value would be about $1.2 million, while QYLD is just sitting at $298,000. Now, if we look at what would happen while we do reinvest dividends, this is where things do get crazy. we can see that our dividend growth stock would be worth about $3.85 million, while QYLD is worth about $1.9 million. So this is our first scenario. The next scenario that we want to look at is if we had a lump sum investment. So let's come back over here to our model, and what we'll do is we'll change this from monthly to lump sum. And let's say we want to invest $100,000. I'll hit enter. We're going to keep all of our other variables the same since that's based off of our historical data. Let's come over here to our dividend growth back test and make the same change. We'll make it a lump sum and we'll invest $100,000 and hit enter. And now let's go ahead and take a look and see how our charts have changed. And let's look at our monthly payout comparison to start. And this is actually a really interesting scenario. You can see our dividend growth stock in red, QYLD in blue. So starting out, QYLD with a $100,000 lump sum would be yielding or paying out about $950 per month, while our dividend growth stock is only paying out about $347 a month. But you can see that the change right here happens pretty rapidly. There's a pretty quick overtake with the dividend growth stock. We can see it's the year about 2033. So after about 10 years, we can see our dividend growth stock would be paying out more monthly than QYLD. So since QYLD's dividend payout continually decreases over time, you can see exactly what that would look like. So at the end of our 30-year period, QYLD would only be paying out $550, while our dividend growth stock pays out $4,300. Now, that's without reinvesting dividends. When we do have dividend reinvestment, this situation, it's going to take a little bit longer for our dividend growth stock to surpass QYLD over time. We can see in this scenario, it would not be till about the year 2046, but at the end of our 30-year period, QYLD would be paying out about $13,000 in dividends a month, while our dividend growth stock is paying out $20,000. Now let's jump over and look at our total dividends received comparison. We can see we have another similar scenario here. It wouldn't be until about the year 2041 where our dividend growth overtakes QYLD once again. And over here, we can see with dividend reinvestment, at the end of our 30-year period, it's going to be pretty similar when it comes to our total dividends received over time. It's going to be about $1.7 million with QYLD, and with our dividend growth, it's going to be about $1.67 million. Now let's come over and look at our total value comparison. Now, without reinvesting dividends, we have a very different change in these two. We can see that our dividend growth stock is going to be a total value of about $811,000 without reinvesting dividends, and for QYLD, we're sitting at $67,000. So it would have lost about $33,000 in value over the lifetime of that investment. Now, if we do reinvest dividends, we can see our dividend growth stock, the compounding effect really starts to take place. At the end of our 30-year period, you're going to be looking at a net worth with this fund of about $3.8 million, while QYLD is going to be sitting at about $1.6 million. So after this entire analysis on QYLD, what is our conclusion? I think there's a couple of different things here that we need to take note of. I think the very first thing that I would like to point out is that if you are a value dividend investor with a long time horizon on your investments, then there really isn't any need to invest into QYLD. I think our financial models made it very clear that dividend growth performs much better over the long term. No matter what you're looking at, even if you're looking at our monthly dividend payout comparisons, our total dividends received over time, or our total value comparison, and that's also true whether you're investing a lump sum or monthly. So that's the very first point I think we should make. Now, there are people who are looking to either retire early or maybe live off of dividends as soon as possible. So would QYLD make sense in that scenario? Well, let's jump back over to our monthly payout comparison. So in the scenario that you're either trying to live off of your dividends, maybe take a year off from work, or you're trying to retire early, we're not going to be reinvesting our dividends. So in this scenario, we're going to be looking over here at this chart on the left. And so there's a couple things to take note of here. Obviously, we're looking at our monthly dividend payouts, QYLDs in blue. So we have to remember that our payouts over time are going to slightly decrease, where if we would have invested into a dividend growth stock, they would increase. Now, this dividend growth stock might not provide enough income immediately to live off of your dividends, which is why so many people look at QYLD. But what we need to understand is there is a point in time where it does make sense to invest in QYLD, and there's going to be a point in time where it does not make sense to invest in QYLD, and it all depends on your time horizon. So I think when you're looking at your monthly dividend payouts over time, if you're planning on either living off of your dividends in the next 1 year, 3 year, or 5 years, it could make sense to go ahead and invest in QYLD. I think anything over 5, 6, or 7 years, you're really going to probably want to start looking at your dividend growth, because if we jump back over and look at our total value comparison, we can just see what a radical difference we're looking at even when we don't reinvest our dividends. We have to remember the total value of QYLD is just going to continue to decrease over time, whereas our dividend growth investment will just continue to increase and increase its dividend payouts as well. Now, if you're going to be investing into QYLD, I think it's wise to do it at a point in time where you're not planning on reinvesting your dividends. And the reason behind this is because if your time horizon is long enough to where you plan on reinvesting your dividends, I think it would make more sense to just go ahead and reinvest into dividend growth stocks anyways. Now, I'm not a complete hater on QYLD. I do think this is a fund that provides some unique scenarios where it could make sense to invest into QYLD. I think if there's ever a time where I needed the cash flows and I don't plan on reinvesting my dividends, then QYLD will hold a place in my portfolio. But currently, as a value long-term dividend investor, QYLD is not a fund that I currently plan on investing to. Now, if you disagree with me, go ahead and let me know in the comments down below, but either way, just let me know what your general thoughts on QYLD are in the comments below. If you'd like to be able to download this financial model where I can backtest and you can compare different funds and different stocks, then go ahead and head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.